What's up, everybody? This is Everything Phoenix YouTube Live, and we are live again here because it's one of my favorite things to do every single Monday, or most Mondays of the year. We're coming here to you with live, real data, real news, not anything you have to worry about online with the media and the national media. You're going to get meat and potatoes when you come here. Why? Well, I'm down in Phoenix, but I'm originally from Nebraska, so that's the best reference I could think of. Hope you can relate. Anyways, we're going to dive right in, and we're going to talk about the housing market. We're going to talk about taxes. We're going to talk about the effect of affordability on the housing market. That is the hot topic. Guys, I'm telling you, when I come live here, I come live on these shows, and I want to talk about things that I'm being asked all the time. Myself, my team, we're in the trenches. We are selling real estate every single day to clients, helping well over 250 families every single year buy and sell real estate here in the Phoenix area. And so we have a finger on the pulse of what's really going on here in the area. And we like to share that with you guys every single Monday. So that continues to be the hot topic, right? Affordability, housing affordability, or lack thereof. What does the new administration, what is their policies? What is that going to do potentially for the housing market, not just in the short term, in the next several months, but the longer term over the next year or two? Well, that's the question. That's the uncertainty. But now we have some certainty because we know who's going to be in office. We know what the policies are going to look like to an extent. And so now you should be able to plan to move forward with what you want to do. Do you want to sell? Do you want to buy? Do you want to invest? We're going to cover all those things and more, so you're fully informed. So let's dive in right now. I'll share my screen. And we got to start with the Cromford Market Index, right? We have to, because this gives us the framework, the foundation of where we currently stand in the Phoenix area. And guys, right now we stand in a buyer's market. That's right, guys, a buyer's market. Now it's been a buyer's market for a couple of weeks, right? And a buyer's market, as you can see on the screen, is between 90 and 110 is a balanced market. Excuse me, a buyer's market is below 90, and we currently are at 87.5, and that has gone down, I believe, by 1 point every single week for the last 3 weeks, when it was around 90. And it was a balanced market. So we're in a buyer's market, guys. So that is a good thing if you're looking to buy. That is a good thing if you think housing affordability got better, because it technically should if it's a buyer's market. Why? There's less demand. It's softening, and supply continues to potentially go up. So now you have that going on. And let's talk about some certain areas of the valley. So here's Phoenix at 113.7. So Phoenix technically is in a seller's market. That's interesting, right? Now, if you look at the East Valley, let's go to some East Valley areas. Let's go to Gilbert, okay? In East Valley, you can see it's at 112. You go to Chandler, you can see that's at 136. And look at the demand, okay? 67. All right. You go to, let's do Scottsdale, okay? Scottsdale is 117. Demand at 73. Now, let's go to the further outskirts of the East Valley into Queen Creek, and you can see it's a lot less, guys. Demand is actually not bad, but supply is incredible. Why? Because a lot of home builders are out there. They're building homes like crazy out there, and so it's keeping the there's good demand because affordability is better out there. It's still making it obviously lopsided and a very much so a buyer's market. Let's go to the West Valley. Okay, Goodyear, 69. Again, demand not bad, supply really high because they're building out there. Buckeye, I expect more of the same. Look at this, 154 in a supply index, because there's so much open land. There's so many people building homes out there that's keeping the whole market very much so a buyer's market. Builders have to unload these things. And right now, if you want a interest rate, guys, I have an article I'm going to cover on my YouTube live right here. But if you want a rate as low as potentially 1.99% in the first year of your mortgage, there are builders out there that are offering that. We have a list of them. Call me, contact us. 480-660-5974, and we'll get you that list. Yes, 1.99%. No joke. Now, obviously, it's going to escalate in year 2 to 2.9 and then 3.9 based upon your rate buy down. But there are people getting right now a 3.99% fixed rate for the next 27 years, or even 30 if they don't get the buy down on their mortgage buying a new build. Could that be you? Let me know. That affects home affordability. That's huge, and it's coming out directly out of the profits of these home builders to stay competitive. So that is a very, very positive thing, guys, if you're looking to buy a new home. So if you go back over here, share my screen, you can see those West Valley areas. Avondale is doing a little better than most. They're at 77 demand and not as much supply, not as much open land with new home build construction. Okay. So you have these areas. Sun City is interesting because Sun City actually is a retiree community, and it's going to get probably stronger. It should be as we head into the more seasonal months, right? December, January, February, March. Demand's at 69. Supply is fairly high. Then you have Surprise, which is a big suburb, right? Again, supply index is off the charts because they have a lot of land and they're building out there, right? Demand is not bad though. Not bad, 91.2. People are looking for affordability in houses, and these gauges prove that is the case right now. Okay. So now let's jump over here and stick on some market. I updated this part right here for you guys, so you'd have a good idea of what the mid-month pricing forecast is. Okay. The monthly period ending November 15th. Okay. Today is the 18th. We are currently recording a sales price per square foot of $289. Average for all areas and types across the entire greater Phoenix area ARMLess database. This is up 1.6% from the 285 we now measure for October 15th. That's appreciation going up, positive. Our forecast range midpoint was 286 a foot, and it hit 289 a foot. We correctly forecasted a rise, but the size was somewhat larger than we even anticipated. 1.6% increase rather than the 0.6% increase they calculated, guys. So what's that mean? That means even though the CMI, the supply demand index, shows that the market is actually coming down to be more of a buyer's market, prices as of 3 days ago continue to go up by a little bit, but even more than they forecasted, 1.6% as opposed to 0.6% on the price per square foot increase across the Phoenix area, guys. But again, real estate's all localized. Check with your local real estate professional because that neighborhood, the city, the zip code you want to be in is going to vary from the one across the valley, right? Across the other side of Phoenix. So that does matter. Now, let's keep it moving here. To my point, that prices have gone up. Now, this is year over year, not month over month, right? That last one was October 15th and November 15th. It went up 1.6% across all price ranges. Well, this is breaking it down year over year in terms of the appreciation per the different price points, guys. So look at your price point. Where would you want to buy your house, your next house, or where would you want to sell your next house? And you can see the appreciation in the certain categories, guys. Check out under 300K, negative 1.7, the only one. Well, why would that be the case? Well, that's a good question. There could be a lot of reasons for that, but one of the things could be is that the financing aspect in this price point for a lot of people is tough. If they're not buying a new build and they're not getting the rate buy downs and the permanent rate buy downs and all this and that, then it is tough because they're very interest rate dependent. Okay, and so that makes it very unaffordable on a fixed income for people looking to purchase in that price point, right? But you look on these other price points and they're all up, guys. Now, obviously, 700 to 800K is the worst performing one that had a positive number. That makes a lot of sense too, because that's just right outside the reach of the conforming loan limit for Fannie Mae and Freddie Mac in Maricopa County. So that makes sense too, right? People are more interest rate dependent. Borrowing money is what they need to do. Okay. And then you look at over $10 million. Holy Moses. Wow, that is incredible. And then 7.5. So money is still pouring into the Phoenix area over the past year compared to where these prices were for these ranges 12 months ago. Okay. That's what this is saying. So very positive appreciation across the board, guys, looking like here for 2024. All right. Now, listing success rate. This is interesting. This is going along the same lines of where this currently stands, right? Going down. Okay. Listing success rate. You have the amount of properties that are successfully selling, okay, compared to the ones that are not, that are canceling, expiring, going off the market temporarily, whatever it may be, but they are going down, guys. See the trend right here from 78% in May of 2024. And this is fairly common to an extent as it heads towards the back half of the year. The seasonal pattern takes over for Arizona. And a lot of the times, outside of a little positive increase right here, it will go down. You saw it last year here, 71%, November, December of 23. We're at 71%, and we're November of 24. You see it right there, right? So obviously we had lows here in 22 when the rates climbed and soared across America. People were not buying homes as much, and so it went down to 61%. But look at in 2008, guys, 21%. That means a lot of homes that were going on the market just were not selling, and therefore prices skyrocketed down. Or I should say, what's that? The opposite of skyrocketed, right? It plummeted. There you go. All right. So now that is the outlay. That is the outlook as to where we stand currently with the housing market in Phoenix. But how are taxes? How are tariffs? How are new government policies coming into play going to affect the local Phoenix market? I'm glad you asked. We'll dive into that right now. Okay. We have an ASU economist, new presidency casts uncertainty on 2025 outlook. Let's see what this person has to say. Okay, the prospect of a new presidential administration is prompting discussions among top economists, tariffs, immigration, tax cuts, and so on and so forth. Okay. Now, win, lose, or draw, change is on the way. Okay. And they're hoping it's all going to be positive, obviously, right? A lot of people believe that. And a U.S. economic policy is in flux. Okay. We're optimists. This is Arizona. It's a great place to be. It's a great place to live, great place to work. Now, here, these bullet points I want you guys to remember. All right. Arizona ranks 9th in the rate of job creation. Number 9 in the country, guys. That's really good. The state's unemployment rate remains at a near record low of 3.5%. Wage growth in Arizona is strong, especially in the areas of private education, health services, professional and business services, and construction and manufacturing. 5 key industries drove 90% of Arizona's job growth in 24. Health services, wholesale trade, construction, education, and professional technology. Job growth is largely back in the West. It is back to more normal times, just like it looked like in pre-pandemic times. Unemployment rates in Arizona remain near record low. This is really good, okay? So this is all good stuff, guys. We're talking about deportations could hurt Arizona for some, the construction industry especially, that sort of thing. And there's all kinds of things, obviously, that they talk about. But those 4 bullet points right here is what I really want you to focus on, because that is the bottom line. And frankly, a lot of the policies coming to effect may actually work in the direction of Arizona to make these even more stronger. So let's see what happens, but let's look at a few of these policies. What Trump's proposed plans could mean for housing affordability. Well, that is the hot button right there. People want to know and figure out, how can they afford a house? How can they buy a house? How can they get into the housing game? How can affordability get better? Well, let's talk about a couple things that may have an effect based upon new policies. Housing affordability emerged as a signature issue for voters. We just discovered that. We just went over that. Okay. Economic and housing market watchers say so many of these issues in real estate are local or even hyper local in nature. That means while the federal government's policies and decisions are sure to impact home builders as well as buyers and sellers, many regulations that affect housing production and affordability are still decided at the local and state levels. And that's why you watch a show like this. That's why you do that, because no matter who's in the White House, a lot of stuff is so local, it's not going to have that big of an effect. Some things, right? Okay. So a couple things here. They were talking about rates. We'll see what happens here, guys. But check this out. In September 2019, the median sales price for a single family home sold in the U.S. was $275,100. Meaning the typical home price has risen 47% in just 5 years, guys. 47% in just 5 years. That is too much at one time. It really is. I mean, a lot of people have equity, and this is good. They're sitting on that, but the locked-out effect is in place. What does that really mean they can do? Okay. If you're sitting on that equity, but you're not going to tap out the home equity line of credit because the rates for that are pretty high, then what are you going to do? It sounds good. Your net worth statement looks great, but would you rather have maybe a little less equity, but be able to get that next house you really want at a more affordable rate? I think most people would probably agree with that. They probably would like that. And so what can they do to bring inflation down so that the Fed can therefore lower the rates? Because that's what it all comes back to, right? Well, let's look at this article and continue on here, okay? So, we talk about rates still, blah, blah, blah. Potential for regulation. This is interesting, guys. Removal seen as a win for home builders. Okay. Deregulation is a big thing. Check this out. I had no idea this was the case, okay? As of 2021, the National Association of Home Builders analysts estimated regulations imposed by all levels of government totaled $93,870, or 23.8% of the average sales price of a new single-family home at that time. 23% cost due to regulation. That was a 10.9% increase from a similar analysis conducted by the NHAB in 2016. Guys, Thomas said the NHAB will be engaging with the presidential transition team in the early days of the new administration on numerous policies, especially regulations that affect land development. Okay. A lot of it has to do with a water law here. There's interpretation by the Biden administration for a Clean Water Act, federal law that governs water pollution. They believe that it was overreach and so on and so forth, and that obviously there could be a lower cost of land, which then brings down the cost of housing and so on and so forth. This is all yet to be seen. And of course, there's tariffs and immigration. A lot of people believe that the tariffs will increase inflation. It very well could be, but the NHAB said they will be speaking with the presidential transition team to hopefully have them have limited tariffs on certain things, and on certain things that are very inflationary potentially to the housing market, leave some of those tariffs off or make them less, so on and so forth. I don't know where we get a lot of our stuff for that housing sector from, but I know Canada is one of those countries, the timber, the wood. And so because they're a really good friend of ours, I don't know if that would be a thing that they would do or consider maybe not having on that specific country. All yet and remain to be seen. Okay, next article. This is interesting. This is someone's view. Time to expand tax credits to spur Arizona's affordable housing. Well, this is localized. This has nothing to do with the White House potentially, right? But is this a good idea? All right, this is interesting because this author makes some pretty good points. Okay, excuse me. There is a state low-income housing tax credit program, which is an essential tool for creating affordable housing in Arizona since its establishment in 2021. Okay. Here is the problem, guys. Developers of affordable housing face the same construction costs, land, labor, and materials as those building market rate projects, but they can't charge market rate rents. This makes it nearly impossible to make affordable housing projects financially feasible without help. In other words, the deals don't pencil. The LIHTC program bridges this gap, allowing developers to sell tax credits to investors, raising the capital needed to complete these projects. I love this idea. I love it because people will act if they're given the right tax incentives or credits. Guys, did you know? Okay, this is an important part that I want to make sure I talk about here in just a second, guys. But right now, did you know that the tax code in America, about 1% of it, maybe not even that, talks about how you pay your taxes? Did you know that 99% approximately of the tax code in America is actually a series of tax incentives to actually tell people how to get these credits, these incentives? Why? Because the government wants to encourage specific behaviors to help the common American, the country out. And they realize they can't do all of these things. So they give incentives to developers, to people, whoever, oil and gas industry, whatever it is, real estate, to help them do these things they want, the behaviors they actually want, so that in turn, the country gets what is needed. It's very smart. And so a lot of times when people get tax breaks and pay little taxes, even though they might earn a big income, a lot of it happens to do with the fact that they are following the incentives laid out in the U.S. tax code, which can be kind of tricky to figure out how it all works, but you got to get with the right people to understand these things and so on and so forth, right? But it's behaviors they are trying to curb in one way or another, positive or negative, and that's why they give the tax credits and tax incentives out, guys. So it's very important to understand that. And so this one good tax author gives a great quote. He says, you don't need to mess if you're in a certain job where maybe you don't get as many tax credits or incentives than another job would, then don't change your facts, or don't change your, how was he saying? I'm going to mess it up. Don't change basically your everyday thing. Just change your facts. So maybe you have to go out and create an LLC. You have to structure something. You have to spend a little money to talk to an attorney or whatever it may be. But every American can do it. It may be harder for others given their current job they're in today, or the structure of whatever income producing activity they're in today. But you can always research the proper structures to potentially, and plans to potentially take advantage of more tax incentives. That's the idea. Okay. So anyways, I want to just talk about that real quick because that is very interesting to me. And I love getting geeked out on tax savings and incentives. But this is what they're doing right here for affordable housing. So that what this gal is proposing is affordable homes help attract workers as well. Very true. Well, here are three different aspects of the low income tax credit, which is the adaptive reuse build. Okay. This encourages converting underutilized commercial properties into affordable housing, repurposing spaces like vacant office buildings or malls. This is a great idea. Love it. Give a tax credit for that. The middle housing bill allows for development of duplexes, triplexes, fourplexes in areas zoned for single family homes. The type of general densification is a practical way to add housing supply in established neighborhoods without fundamentally altering their character. Guys, that's not a bad idea either, obviously, because the zoning is very expensive. Zoning takes a lot of time. Zoning is not guaranteed to be changed, even if you spend a bunch of money to try to get your zoning you want to build your project. That would allow it to be a lot faster. Okay. The casita bill also passed last session. I've covered this, guys. You guys know this by watching the show. Empowers homeowners to build small additional units on their properties, adding affordable rental options across the state. Okay. That's not a bad idea either. You can put a little structure in your backyard, rent it out, and hopefully never have to see or deal with the people that much because they're in your backyard, and maybe you can build a wall. I don't know. Your choice. But it could get a little weird. I'm not going to lie, but people are doing it in the Airbnb world for a long time now. So I guess it's not that strange. And so these are some ideas this gal came up with, which I got to say, guys, are something that probably we should look at, okay, to figure out how we can spur affordable housing development in Arizona, okay? Thinking of taxes, or speaking of taxes, this think tank ranks Arizona among the most competitive states for taxes. Guys, this is something you want to know. This is really good, okay? This is really cool. Now, what they came out with is that when it comes to individual taxes or areas of taxation, Arizona ranked number 2 nationally for its unemployment insurance taxes. They bumped from number 3 last year. This is good. And the report highlighted Arizona flat individual income tax rate of 2.5%, which is the lowest in the country and makes the state the most competitive than any other state that imposes taxes. Arizona ranked number 8 in that category. That's good. Now, obviously, why are they not number 1 if they're the most competitive? Well, because there are multiple states that have 0 when it comes to state income tax, right? So outside of that, it's the best, right? Such low rates make the state very attractive for taxpayers who have decided to leave high tax states like California, okay? Now, Arizona is attractive to wealthy retirees. For corporate taxes, Arizona with its flat rate of 4.9% ranked number 13 for corporate taxes. That's really good, okay? And it also ranked number 13 for property taxes. Guys, you hear me talk about all the time. Property taxes in Arizona are amazing because they're so low. Although there are 12 other states that apparently have lower tax rates for property taxes. That's incredible as well. Okay, why? Because if you're a homeowner or an investor, you put more of that money back in your pocket. Okay. What else? Arizona's lowest ranking was number 45 in the union, which is not great for sales tax. Okay. So that is not ideal, right? When it comes to sales tax. Okay. Number 1 state in the index for the last 5 years running was Wyoming, which has no individual or corporate income taxes. That's incredible. The other top 5 overall states were South Dakota, Alaska, Florida, and Montana. And the bottom 5 locations with the highest taxes were New York, New Jersey, California, DC, and Connecticut. Go figure. I think we all kind of had an idea that was the case, right? But Arizona is doing really well. We could go into, in fact, I'll probably record a whole nother video, honestly, guys, and post it to the YouTube channel here in the next couple of weeks just on taxes in Arizona, because this goes a lot deeper and we can break this down a little more. All right, going on to why Arizona is so good. Check this out. Arizona's gained 173 Californians a day for a decade. Here's the main reason why. Ooh, that's a cliffhanger. I love this. Here we go. More than 630,000 people have moved to California or from California to Arizona in the past 10 years. That is this roughly the size of Tucson, Arizona. Okay. That is incredible. Only Texas saw a larger influx from the Golden State, according to a new migration trends report from Storage Cafe. Okay. This is pretty interesting. All right. The main reason, or one of the main reasons, tax savings. The report contrasted Arizona's 2.5% income tax with California's nation-leading 3.3% and Arizona's 4.9% corporate tax rate compared to California's 8.8% corporate tax rate. That is a savings of around 7% advantage over Arizona in average income, make it less attractive to pinched Californians. Guys, this is crazy. I didn't know that Arizona's income wages are about the same as California across the board for many different age groups. This is wild. Look at this article. Well, here's what it says right here, guys. Check it out. All right. In fact, I'm going to go to the Storage Cafe article I found right here. Let's give you the graph. Check this out. Look at this. Millennials. Okay. Average income in California is $46,000 a year. In Arizona, 49. It's more. And yet the housing and everything else is way more. Gen Zers, 19,000. Okay. In California. In Arizona, it's 22,000 a year. Baby boomers, 67. Okay, this is lower in Arizona, 50. Gen Xers, 79, lower in Arizona, 64. And the silent generation, 46, lower in Arizona, 39. But if you are a millennial or Gen Z, holy cow, you can make more being in Arizona, and the cost of living is somewhere around the ballpark of 20 to 30% less. That is wild, okay? So this is a big reason why you may want to go to Arizona, even though the housing costs have dramatically increased over the past 5 years. We just went over that, right? It's still cheaper than California, okay? And I love about this article too, is it gives them the maps, right? You can see right here that top destinations for Californians on the move. Number one by far, Maricopa County with 34,000 move-ins, okay, in the last year. And then you have the map right here, migration map, most of it coming from LA County, and then San Diego County, Orange County, Riverside County, and rounding out the top 5 for California, San Bernardino County, right? Pretty wild, right? And if you go into here, this is interesting, right? For the other counties that border California, Mojave, La Paz, Yuma, they're coming primarily from San Bernardino County, which makes sense, and San Diego County, okay? And last but not least, if you're going to Pima County, which is where Tucson's located, you have the LA area, but then you have the San Francisco Bay Area up here, Alameda County, contributing to the population migration to the great state of Arizona. Okay. This is wild. All right. Now, the ballooning cost of home builder rate buy down incentives. Okay. Got a few more articles to cover, guys, and we will wrap this up. When mortgage rates began their ascent a couple years ago, many potential home buyers were forced to the sidelines. Okay. Now they are talking about these rates I just talked about. Burton said he's seen incentives that may include interest rates as low as 1.99% on a 3-2-1 buy down mortgage loan. That means the first year the loan percentage would be 1.99, then up to 2.99, then the third year 3.99. The fourth through the 30th year would be a 4.99 rate. Wow. That is incredible in an interest rate environment where right now we're seeing the 30-year fixed still hover around 7.08%. That is crazy, guys. So what a deal. What a bargain for that, right? So guys, if you're looking for the list of home builders, let us know. We'd be happy to get that to you. But here's the deal. It's coming directly out of the builder's profitability, the gross margin. It says right here that today many home builders feel it's unavoidable. Okay, they have to do it. They estimate home builders are spending anywhere from $40,000 to $60,000 on a $500,000 home to help bring interest rates down for home buyers. Now, they admit they are still making money, okay, but not what they were making 2, 3, 4, 5 years ago, okay? And that goes across the board for most builders. Guys, if they don't do this, they will be non-competitive. If they're non-competitive, they will not be able to sell homes. And if they can't sell homes, their shareholders lose a lot of money. Stock doesn't perform. That's not a good thing. So home builders are incentivized across the board to slash their profit margin and give that $40,000 to $60,000 on average per $500,000 home to you. So if you're looking for a new home build, okay, if you want a newer house and you want that 1.9% rate in year one, come talk to us. We'll get that set up for you guys. We have relationships with a lot of builders and home reps across the greater Phoenix area. I've been doing this 19 years, and we'd be happy to put those relationships to work for you. 480-660-5974, and we'll get you set up with one of these great communities across the Phoenix area and get you locked into a low fixed interest rate, okay? Way lower than 7%, way lower, all right? Now, a few more articles here. Speaking of developing and home building, Austin developer breaks ground on a 5,300-acre master plan community. Guys, this is in Peoria, okay? It's called Saddleback, and they're going to have a lot of homes. In fact, about 8,000 homes, 6,500 homes, and another 180 multi-family units, okay? Again, trying to have a little mixture of super affordable properties, multifamily, up to single family homes, and so on and so forth, guys. So this is a really cool thing because we need the housing inventory. Castle Hill Partners will be taking the lead on this development, and that's coming to Peoria up in this area, guys. Look at that beautiful Sonoran Desert, okay, with the great views towards downtown Phoenix and uptown right there. This is where Saddleback will be breaking ground. So if you want any information on that, you want to be in the Northwest Valley, which is exploding. The city of Peoria is exploding with growth. Let us know. Okay. And here we go. Procter & Gamble lands a major site development for the Phoenix area for manufacturing, guys. This is going to be huge. It's 2 million square feet of space, and that's coming in the Coolidge area, which is south of the Phoenix area. You can see that red dot down here. Okay. And you can see the Phoenix area is up here. So it's a drive away. Okay. You won't want to probably live up here and commute. That's for sure. You rather live down here where the housing is much more affordable and you will have a pretty secure job, because last time I checked, Procter & Gamble makes a lot of stuff and they aren't going away anytime soon. Okay. Now we talked about interest rates, guys, a little bit. Look at the economy. It is crazy. It's responding wild to what's going on here with the new administration that's coming in and what is to be promised. And you have 30-year fixed that rates that still are not just moving much. Why? Because inflation, guys, is not down. Last article I'll leave you with, guys. Housing inflation specifically accelerates in the month of October amid slower progress on inflation fight. So again, not to beat this dead horse here, but the CPI just did not go down. It went up, in fact. And so it's showing that inflation is not under control. Okay. On an annual basis, shelter costs rose 4.9% in October. This is not good. Falling inflation hit a snag in October with the usual culprits, rising shelter and food costs, okay, as well as new home, new car, new vehicles, and used vehicle prices as well going up, okay? So this is not good. So that being said, guys, here's a good graph that I want to show you guys. Housing costs keeping inflation over 2%. Look where shelter inflation is at 4.9, okay? Overall inflation, 2.6 with the CPI. But because shelter inflation is so much higher, and obviously the cost of insurance and vehicles and food at the grocery store are not going down either, it's keeping rates up higher, like you see right here. So hopefully, guys, we'll see a break in this, okay? Hopefully we'll see a break in this. And, I'm sorry, guys, I'll show you this right here. I'm going to show you this 30-year fixed right here. And then, of course, we talk about the article from Yahoo Finance right here with this graph being inflation over 2%. You can see shelter inflation at 4.9 right there. Okay. Sorry, guys, I want to share my screen, but hopefully we can see a break in rates as soon as we have a break in inflation. Well, inflation just can't come down overnight. All the money that was printed, that circulated through the economy, has to go through the economy, be used and get into place and circulated. And then inflation can continue to hopefully matriculate down. But the worst thing we could do is print more money and put more money into the local economy or the economy for America right now when we don't need that. So hopefully that doesn't happen, whether it's Biden or Trump, doesn't matter. Hopefully it doesn't happen for any government officials, and we let this go through so that inflation can continue to hopefully come down. And then we can, at that point, have rates come down. And then at that point, it would be amazing because we'll have more affordability in the housing markets. All right, guys, hope you enjoyed the show today. We really take a lot of time to research this stuff, to bring you some action-packed, hard-hitting data that cannot be refuted, because it's just that data, not someone's opinion. And guys, thank you so much for joining us. And until next Monday, catch us right here at the same time, 12:30 local Mountain Standard Time. Keep it classy, Phoenix. Talk to you soon.